Are you still paying outrageous premiums from the big guys? At SD Bullion, we don't spend millions sponsoring NASCAR teams and renting out floors on Trump Tower. We simply offer our customers the lowest priced gold and silver bullion anywhere. Get the service, shipping speed, and personal attention your order deserves at SD Bullion. Did you know that SD Bullion has an A rating with the Better Business Bureau and has one of the highest customer satisfaction ratings in the industry? What are you waiting for? From the basics like eagles, maples, rounds, and bars, to collector coins like Silver Shield and the Heroes SD War Collection, to our new line of the best tasting, GMO-free survival food on the market, SD Bullion has what you are looking for at the lowest prices, period. Guaranteed! Because if you don't hold it, you don't own it. SD Bullion, founded by stackers to help you prepare for what's coming. Shop with the doc today at sdbullion.com.
Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, Eric, it's been quite a week of action in the metals markets here. Really began before this week, heading into the close in the thinly traded holiday week last week. We saw a takedown a bit on Black Friday, and then just a slaughter in the metals early overnight Sunday on the Asia Open. Silver trading down to $14.45. Gold traded back well under 1,200. And then we had a big move to the upside on Monday as the shorts got squeezed a bit. Silver had a big outside reversal day, again with the lows overnights of 14.45, I believe. And then the move well higher. I forget the exact number, but it was, I want to say, around 1670 was the high. We saw those numbers hold throughout the week, at least in silver. Silver has held above the $16 support level, which again has been a big technical level of previous resistance and now support here. Closing the week here on Friday in the access market right around 1630 in silver, and in gold the cartel was able to knock it down early today back under 1,200, which is big level they've been trying to cap it under for the second half of the week, and it looks like they are going to get a close in the access market here today on Friday under 1,200, as looks like around 1193. So what's your take, Eric, overall on last weekend, the big moves in both metals, and then how the trading played out this week?
It's really constructive, and it's speaking to the fact that we have what looks like the bottom, as we were talking about. Way back in the beginning of November, in the early part of November, we had a lot of turmoil and whatnot, and though it doesn't feel like we have, in fact, been going through the process of solidifying this bottom, that's in fact where we are. These really big outside reversal days on 2 Fridays, as well as that big snapback on Monday following the no vote, just speaks to a different type of character in the trading that's going on, where there's more interest in deeper pocketed investors picking up metal, and the snapbacks after each raid are of much shorter duration. They come in faster and stronger. Even today, on a non-farm payrolls report day, where typically the cartel comes in and pressures metals downward, we saw mining shares doing their typical telegraphing of weakness to come on Thursday, and here we are Friday with the dollar moving higher than it's been since 2009 based on the dollar index, and all of this enthusiasm about this lackluster jobs report pushing the dollar up and gold down and whatnot. But all things considered, this kind of downside action in precious metals is not that much. I mean, the cartel is having to expend a lot more of their resources to actually push prices down, and the GOFO rates that we've been seeing over the course of the last month or so speak to this as well. We finally flipped over today to a positive rate in GOFO on the 1-month rate, but overall it's very clear that the constraints that come in from the physical market once prices get pushed down too far, too fast, are stepping up and keeping the markets solid again. We're on a rebound cycle, and it's not over yet. I think we're going to see a lot of higher prices going into next year.
And it's not just the wholesale gold market that's showing tightness with the negative GOFO rates, even just the retail market for coins and bars for gold and silver is very tight in the U.S. right now, particularly more so for silver. We're seeing a premium spike in 90%, similar to what we saw a couple of years ago, and again, the last big one was 2008. We haven't seen quite to those levels yet, but premiums have spiked towards close to $3 an ounce on the 90%, as supply has just completely dried up, as there hasn't been any sellers, with silver dropping below 15, and as everyone knows, the 90% is no longer in production. It has not been for quite some time. Generic rounds and bars, production delays, pretty much any mint you want to talk about, anywhere from 2 weeks to 8 weeks out on production delays. The U.S. Mint continues rationing and allocating Silver Eagles, and the same thing for the Canadian Mint for Silver Maples. And the production numbers for the U.S. Mint are now really within a day or two's sales of setting a new all-time record. Here at the close on Friday in 12/5, the U.S. Mint is reporting 42.369 million Silver Eagles sold year to date. That contrasts to 2013, which is the previous all-time record, at 42.675. So we're about 300,000 Silver Eagles away from a new all-time record. That'll happen on Monday, assuming the U.S. Mint sells coins next week, and assuming that they honestly report what they do sell. So if those two caveats do occur, that'll be taken out on Monday for sure, as 300,000 coins in the wholesale market is really, from the numbers we've been running, about a day or two's worth of sales. So we're looking at all-time sales records on an annual basis for Silver Eagles here. And I was kind of just discussing with Eric prior to the show, I'm kind of personally wondering whether we might see a reversal of what we saw last year and at the end of 2013, where the mint shut down early and there were no Silver Eagles available for about 6 or 7 weeks. And then there's the big sales spike in January. I believe 7.5 million were eventually sold in January, where you do that all that pent-up demand from December. It wouldn't surprise me if the mint continues allocating throughout the end of December, and then really doesn't produce many of the 2015 coins, at least in January. So that's just a bit of speculation on my part, just from what we're seeing in the markets. We'll have to see. But really, across the spectrum, physical demand remains extremely strong. Thankfully, we haven't quite seen the premiums yet that we saw in either 2008 or 2011 either. So outside of 90% silver, most coins, bars, and rounds are premium-wise still, while they are up a bit, they're still they're not outrageous yet, which does provide an excellent opportunity to acquire physical insurance.
Are you seeing anything shifting in terms of delivery time?
I mean, the Canadian Mint right now is probably 2 to 3 weeks out. The U.S. Mint is releasing coins every week now, but they are allocating their sales, so they're really only releasing a set amount. The authorized dealers can't purchase as many coins as they wish. On the private mint side, the Sunshine Mint is still about 4 to 5 weeks out, and a lot of the other the larger private mints are 2 to 3 weeks out on production delays, just due to massive demand that they're running their presses around the clock, and there's only so many coins you can stamp out in a day.
It's going to be an interesting year as we close out 2014. We had Black Friday sales numbers coming in weaker than expected, but it was also interesting to notice that there were estimations of more than 6 million shoppers that didn't show up. And I think to some extent that might actually reflect just people being tired of this whole Black Friday nonsense and the holiday season, from the advertising perspective of the drum beats coming from Madison Avenue, constantly pushing consumerism at a level that's just ever more intense in America. Who knows? We'll see. But There were a couple of years previously where Black Fridays didn't turn out that great, but the overall shopping season was moderate to somewhat healthy, and I suspect to some extent we're going to see just kind of a shifting in terms of when dollars are spent as opposed to how many dollars are spent, and that this holiday season will be, mediocre, nothing amazing or anything, but good enough to continue on with this manufactured economic reality that's going on, where statistics are being manipulated more so now than ever before, in my estimation. And the continued QE round robin that is going on between central banks, pushing up assets prices further and further, and then this whole elevation of our stock market continuing. Whereas at some point in 2015, I think we're going to have a day of reckoning. But for the time being, they're going to manage to continue this illusion going for a while. But anyway, just wanted to toss that out as far as the economic backdrop, and there's been a lot of interesting things going on too when it comes to what will ultimately put pressure on the dollar in the long run. And Russia has been very busy making changes in their strategic energy mix when it comes to delivery of natural gas to Europe. Europe is going to be paying a lot more now because of the South Stream diversion, and Russia now going to be constructing a pipeline through Turkey, and there's a lot of dynamic shifting going on now when it comes to the energy markets, which will put pressure on the petrodollar, and then in turn this whole dollar reserve status system we've had since the Bretton Woods system put it in place, and is continuing to come under great pressure. So it's something that we're going to be talking about a lot in the weeks ahead.
Eric, let's talk a little bit here. I guess the news is about 5 days old, but this is the first time that we've had a chance to talk about it in the show since the vote came in as far as the Swiss referendum last Sunday failing. A lot of people are speculating that that contributed to the final takedown Thursday, Friday, and Sunday night in the Asian markets and the metals. Kind of could see it coming for the last couple of weeks with all the propaganda the bankers were spewing out throughout Switzerland, that it was going to just destroy their economy and ruin them. And it's a great thing that the vote happened, and quite astonishing that the vote even happened, but frankly it didn't surprise me too much that the propaganda won out in the end.
Yeah, it reminds me a bit about the GMO votes for labeling in California and Oregon. I live in Oregon and was amused to watch the just avalanche of Monsanto procured advertisements to stop labeling. And, they basically would have an unlimited war chest to fight. And that's kind of like what the Swiss establishment was doing when it came to pushing back against the whole effort. They came out of the gate, bought lots of advertising, and basically made everyone very scared about their economic prospects should they revert to 20% reserve status for their currency. But overall, it was a very educational process, and a lot of more people are thinking about the role and importance of gold and just the whole instability and lack of trustworthiness when it comes to banking institutions worldwide. And this is now something that is spreading. The leading conservative party in France that may in fact capture the presidency is now talking about gold repatriation. We have other countries now thinking more about it, and on a net basis, central banks are accumulating gold as opposed to, I think it was in 2004 and earlier, central banks on a net basis were sellers of gold. So, there's an entire sea change going on now, and it takes time for these things to happen, but we are moving through the arc of history where gold is moving back into the center of the monetary system worldwide, and that's a damn good thing, considering how crazy things have gotten with all of our fiat-driven bubbles.
Yeah, it certainly is. So I guess I'm just interested in your take, Eric. Was really the whole Swiss vote just used as an excuse once again by the bankers to smash down the metals, or do you think it really did play a role in the global markets? I mean, really, it's not like we saw gold skyrocketing in the weeks leading up to the Swiss referendum as...
Oh, yeah. No. In fact, I think people put more emphasis on what importance the whole vote was going to be, and that gold and silver were just bouncing back generically because they had been pushed far too much during the course of 2014. I mean, about a week and a half before the turn in November, in looking at the severity of volume turnover in the equities for precious metals, mining shares and stuff, I could tell that we were getting towards a point of capitulation, and they called it as such, and the markets did turn, and even this whole Swiss vote, the metals weren't rising that much in advance, and then when about 2.5 weeks or so before November 30th, it was very clear by polling data that the momentum had completely vanished, and the vote was probably going to turn out negative, but gold and silver kept going up. It was amusing that during the weekend of the vote, some gold analysts were saying, well, if the vote goes negative, that gold and silver will fall down a lot because gold and silver had been pushed up because of the vote. But in fact, if you just look at the polling numbers in the last 2.5 weeks leading up to November 30th, it was clear that gold and silver were moving up in spite of the fact that momentum for a yes vote in Switzerland was falling apart. I wrote an article about that and basically said that the snap down momentum that briefly came would snap back, and in fact that's what happened earlier in the week. So I don't know. I mean, it was a wonderful thing to see from an educational point of view, and ultimately the whole world economy has to move more into a direction of something that will replace the Bretton Woods system and dollar standard as it exists now. And gold will have a role, whether it's more on some kind of a modified gold standard or just gold being an informal part of whatever the reset or the post-reset world will be, remains to be seen. But the Swiss vote is part of the chapter in the book of that history unfolding.
Right. It will be interesting to see going forward in the next few weeks whether, like you believe, Eric, we have finally seen the final capitulation and bottom, or whether we do get a bit more selling and one final drop down, especially with as we get close to year end and funds and investors wish to sell for tax reasons. But I know a couple of weeks ago I had mentioned, I think at the time silver was around in the low 16s, and I had mentioned that while we were at 5-year lows, silver we hadn't yet seen a big $2 price spike from an overnight sell-off and a bounce higher like has typically been seen in previous bottoms. So we have now seen that with the move from, I think, 1445 up close to 1670 over $2 move. So we do finally have that kind of violent spike up, short covering move off of an overnight low throughout the next day. We have the big outside reversal. So we do have the potential for a bottom, but again, it is pretty early. Bottoms are a lot easier to spot in retrospect a little bit further out. We still, long-term support still, now that 16 was broken, is around the $9 range. So if oil does continue plunging and heads towards $50 a barrel, it wouldn't surprise me to see silver break down below that 1450 level. So I guess time will tell. I'm not quite as convinced currently that we do have a bottom, but we do have the potential for a bottom with that kind of a short covering spike off of the 1445 level. All right, so we'll keep our eyes on the markets this coming week, with gold and silver kind of consolidating over the second half of this week. Not too much action. We'll see if that continues next week or if volatility returns to the market. Again, Friday afternoon here, gold was kept below or back under 1200. It'd be nice to see gold regain that 1200 level early trading next week to kind of continue the move up off of the recent lows. So I think we'll wrap things there this week. So for the Doc and Eric Dubin, thanks for tuning in to the SD Weekly Metals and Markets.
Those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming. When I've asked Federal Reserve chairmen in the committee about this, they never said, no, that's not going to happen. They use the word orderly. As long as it's orderly, it seems to be okay.